Okay, so the first question that I've read is, why do we have to use charts from different brokers like Pepperstone or Wanda? Now, the thing and the only reason why we use both these brokers is to reassure that the data feed that's being provided by these brokers align with each other. So when you have breakout on Pepperstone and Wanda, that confirms that the storyline has started or finished. So you want to be basically 100% confident about the direction. Okay. Sometimes Owanda has a breakout, Pepperstone does not have a breakout, and sometimes Pepperstone has a breakout and Owanda doesn't. Basically, you're gonna be following only Owanda when Pepperstone is not aligned. Okay, so if that's the case, then why we don't choose Owanda all the time? Now, Owanda is only good for storyline. It's not really good for entries. So to be having really good and precise entries, you're going to be using Pepperstone on H4 and H1 for your entry levels. But to confirm your storyline, you're going to be using the daily and the H4 on both. So Pepperstone and Owanda. I'm going to show you some examples in here. Okay, so the last time that happened to me was, I think, gonna look for the example right here. I still remember a clear one. So I had a daily reject daily from below and an H4 breakout on Pepperstone right here, as you guys can see. All right, let me just mark out the daily level. Where was it? Okay, so we had the daily reject daily from below right here. Okay, daily reject daily. And the H4 breakout happened. But then why did price fail to go up? Why did it go all the way down here? Now, the reason for that is we did not have a confirmation as well on Owanda. So you want to always confirm with Owanda as your second broker, okay? Your first broker is going to be Pepperstone. If you have a daily reject daily H4 breakout in there, you're going to be going down to Owanda to confirm that. Now here in Owanda, you don't really have a breakout. Look at that. So price did the daily reject daily from below, and here it basically did not break it. Okay, so now just to make it clear about the difference between the internal and external, I've seen some of you also got confused about that. So it's very easy, guys. Just make it simple. Just ask yourself, okay, so here, this is the daily, and the first sign is the daily rejection, right? So this is the first sign, daily rejection. Now the second sign is an H4 external breakout. What's the difference between an H4 external and internal breakout? Just look at when price touched the daily on the H4. On the H4. If price touched it here, you're going to be looking at the last A level for buys that got created before this touch. Okay, so just put a horizontal line here on when it touched and look at the breakout. Okay, so the A has to be before the touch. It's that simple. If the touch is right here, let's say we touched it by a wick, this is going to be internal breakout because you're going to be putting your horizontal line here, and this A level is after the touch, so this is internal. It's very easy. Okay, don't confuse yourself. I'm not really sure about RoboForex. I don't use that. For now, I use Fusion Markets, IC Markets, and XM. I'm not sponsoring those. I'm just telling you guys what brokers I'm using. So IC Markets, Fusion Markets have been treating me very, very well, especially with the withdrawals, like half an hour, 1 hour, it's in my Binance. Okay. I use crypto for withdrawals. So yeah. Do you guys know what's the current daily storyline for gold? And can you guys show me where it started, basically the last daily reject daily H4 breakout? I'm gonna wait for your answers here. Okay, so this is an H4 breakout, but you have to give me the daily. So here on the daily, what we have is the last daily candlestick that did the rejection. Exactly. Very good. That's very good. That is the last daily reject daily. Okay. This is the last daily level that got rejected right here. As you can see, it got used once, twice. This is the third time. Okay, so daily reject daily, you put a horizontal line, you go to the H4, okay, and this is the last A level that got created before the touch. Now we touched right here and we did a breakout. If this is confusing you, then you can use this A level here instead. Now after this H4 breakout, price went up. Now this is the last daily reject daily H4 breakout. So that means the daily storyline is currently bullish. We don't have any signs for bearish storyline because we don't have levels in here on the left. And if you guys remember, how do we turn bearish here? Is by having or creating a level that we can reject from, okay, in the future, and then we can start going down. Okay, so about entries, today we're going to be taking a look on how to take entries from MSNR perspective. Okay, so today's entries, we're going to use H4 and H1 timeframes, and then I'm going to show you how to use ECMTF, that stands for Essential Correlation Multi-Timeframe. We can use all the timeframes down until M1. Okay, so first of all, I'm gonna tell you which one is my favorite. Okay, my favorite entries for prop firms. Okay, for prop firms is the H4, H1 that I'm gonna show you first. Okay, they are called the continuation and anticipation trades. What's the difference between anticipation and continuation entries? Is basically when the storyline is bearish. Okay, storyline is bearish. Let's say it's bearish. Okay, and then shifts to bullish. Right when it shifts to bullish, you want to anticipate the bullish storyline before it starts, basically before the bull run. This is the anticipation trades. The zone for anticipation trades are after the breakout happens. So after the breakout, you're going to have all this zone. You're going to have some key levels in here. I'm going to show you which one to pick and which one not to pick. So this is the anticipation zone for your entries, okay, for this bull run. Now, if you have a target, okay, because we said daily to daily, you have a daily level to another daily level. Now, this is your next target. Now, price goes up. Is this the only zone you're gonna be taking trades from? No, this is anticipation trades. Now, these up moves and pullbacks are called the continuation. Okay, so this is the continuation entries. Now, after every pullback, price is gonna find levels on the left. It's gonna pick the right one. I'm gonna show you how to pick the right one, and then goes up. Pick the right one, and then goes up. Okay, so anticipation trades and continuation trades. Which one is better? Now, both are good. Now, which one you're gonna get more frequency is continuation trades. Continuation trades, you're gonna have at least 2 to 3 trades per day. Okay, but anticipation, it might be like once a week, sometimes 3 times a week. It really depends. Now, this area right here is very low risk. It means that the entry from this zone, like it's very high win rate. About the continuation, you're gonna have a lot of trades. Automatically, the win rate is gonna be lower than this zone. I'm gonna show you how to take that. The first entry type, which is one of the strongest entry types, is when you have your daily reject daily, and then H4 breakout. Price tends to pull back to the last H4 level that got created above, right here, okay? This extreme level in here. This is the last level that got created, okay, before, after the breakout. So price tends to pull back, and then you can get an entry from there. So you're gonna be holding this trade from this daily to the next daily below. I'm gonna show you an example on the charts. So what we have here, a daily reject daily, as you can see, okay? Oanda gives me a daily reject daily, and it gives me an H4 external breakout. The last H4 A level that got created before the touch is right here. So let's confirm that with Pepperstone. Okay, go to the daily. You have a daily reject daily from here. Okay, daily reject daily from here. And then you go to the H4 and look for the external breakout. Now here, don't get confused from this gap, just go and use line chart. Now, once you go to the line chart, you can see that you have a breakout right here. So that confirms that we are bullish. because we have a breakout on both brokers. You have a breakout on Pepperstone and a breakout on Owanda. Now, the entries are going to be going to Pepperstone, okay, for your entries. Now, what's the entry type is price pulls back to the extreme level, okay? Breakout, pulls back to the extreme level, and then goes up to the next daily. Now, the extreme level is right here. This is the last resort level. It's called the last resort level. Now, this level, you're not going to be entering off of that alone. It doesn't mean you're going to see, oh, H4 breakout, H4 fresh level, pullback, entry. It is low risk and you can enter from there, but if you want a very precise entry on each entry type, you have to refine that down to H1. So H4, it's fresh. Let's check on H1 at the same zone if it's also fresh. Okay, so you go to the H1, and as you can see here, H1 is also fresh. So Pepperstone here did not touch it. As you can see, it missed it by 0.1 pip, but on my broker, I was able to execute that on the same price of this, like 2,147. On Owanda, I think it touched, yeah. Yeah, on Owanda also it missed, but yeah, this happens. So this is the first entry type. Any questions about this, guys? Clear, good, everything clear. Now, after price tends to pull back, sometimes it does not pull back all the way down. Sometimes price just does this, A level, breakout, and then pulls back halfway and then goes up. Why does that happen? Okay, now why did price here went all the way down? So you see the breakout range here, the breakout range, when price went from this low to this high, the high probability zones are below the 50% of this area. So here, from this low to this high, the levels that are above the 50% doesn't mean they don't work, but the ones that are below have higher probability than the ones above. So it's better to wait in here if you don't have any fresh levels in here. Now, as you can see, this one is unfresh. This one is fresh. So you can refine that to the H1. Now, if it is fresh on H1, you can take an entry from there. Now, as we can see, the H1 here is not fresh. That's why price failed. So let me repeat that. Price does a breakout. It pulls back to the last fresh level in here and then goes up. If there is no fresh level, it's going to keep going down until it finds the fresh level and then goes up. It can find a gap. It can find this RBS. It can find this QM. It can find this level. Now, the first fresh one that is fresh on H4, H1, okay, is going to give you at least a 50 pip reaction. So the third scenario is price doing this. Okay, let me just finds a gap, goes up, then goes down, finds another gap, goes up, goes down, goes to the last resort, and then go up. Now, the higher probability zones for swings are the QM and the apex. Okay, so this is called the apex, the last resort level. So you're gonna have the QM and the apex. If you take a buy from here or a setup from here, you better hold it to the next daily. Okay, but if you take the setup from gaps in here, let's say you find an H4 fresh level in here that is also fresh with H1, just TP at 60 pips or 100 pips. It depends on the momentum. Now, what is the momentum? The momentum is how fast does price goes away from your entry. If you take an entry at a certain level, the momentum, you can check that on M15 or M5. If price touches your level and keeps chopping around and takes so long to go up, just TP at 60 pips. But if price just goes and skyrockets like in few minutes all the way up, you TP at 100 pips, okay? That's the momentum. The momentum defines if the setup that you took is going to 100 pips or 60 pips just for the gaps right here, or the RBS that I don't like, okay? You can guys use the RBS, but I prefer not to. It totally works, it's totally fine, but in my trading plan, I don't use RBS or SPR. It might work for you, but for me, even if it works, I'm not gonna use it because I just don't like it, okay? So here, gaps, let's find some examples. Okay, now this, we are still in the anticipation trades, okay? When the storyline shifts to bullish or bearish. Now here, daily reject daily, as you can see, daily reject daily. Once you go to the H4, you can find on H4 the external breakout right here. Now the external breakout is not this one, okay? I showed you this on the last session. This is not the last, this is not the external because it got created after the touch. Now, after the external breakout, price pulled back and then went down. Now, as you can see, price reacted from this level and reacted from this level and did not react from here. Okay, this is the last resort level, the low risk entry. So price here went up, pull back, it finds the H4, you refine that down to the H1. Okay, you do the same thing with this one. Now price here gave us around 116 pips. If we go check on M15 here, I can't do that on TradingView. It doesn't let me go that far back. Let's just go and check with the H1 for refinements. You can see that the M15 went fast away from the entry level. So here, the H4 was fresh. The H1 is also fresh. In this scenario, the H4 was fresh. The H1 is not fresh, but still price reacted. Now, why did price react from here? Now, because you have a CC candle. What does a CC candle mean? Now, a CC candle is called, the definition for CC is confirmation candle, okay? Confirmation candle. What does that mean? So the H1 can be unfresh, but if it has a CC, like this one right here, you can still take an entry, but just know that it is high risk. I'm going to explain what's that. So you have a level that is a gap, a V, or an A, it doesn't matter. Okay. This is on H1, H4, okay? Talking on H1, H4. So if price comes down and it rejects it, Now, if the rejection candle, if this rejection candle closes as the same direction of the level. Now, if this level is a V and it's a support to buy from, we want the rejection candle to close bullish. If it closes bullish, this is called the confirmation candle. So in the future, if it ever gives us a setup on H4 and we refine it down to H1 and we find this CC, we can take one more buy even though it is unfresh. As you can see, the direction of this SRB, basically SBR, support becoming resistance, okay, it was fresh and then price did what? Rejected and closed bearish, the same direction of this RBS, okay, SBR. Basically the SBR, we're going to be using that for sells. So this rejection candle closed bearish, okay, so that is a CC. If it closed bullish, that would be invalid and it would still be unfresh and you can't take an entry from there, okay? Any questions, guys? So for the stop loss, you're going to be, guys, putting 30 pips fixed. If you use it, if you have spread on your broker, just use 32 pips for spread. So you're going to be entering there, sell, 30 pip stop, okay, or 32. Your TP is at 60, okay, is at 60 if the momentum is slow here on M15. But as you can see, this H1 candle looks so bearish. That means the momentum was good on M15. That means you would want to expand your TP to 100. Now, by that, you're going to have 3.333 RR, okay? Now, you're not going to get a lot of anticipation trades in the week, but the continuation, you're going to have at least once, twice, 3 entries per day. So here, why did price pull back and swing from this? Okay, why did it swing from this level right here? Even though it's not the last resort level. Now here, what do you have? You have a QM. You have a QM. We actually reacted from this level, but at the same time, we touched a QM. So having an entry in this zone, okay, you better hold it for a swing. Okay, so the reason why price went for a swing from this is because we touched the QM at the same time. Now, if you check the QM, we might have took a loss in there because that's 34 pips, which happens. It's totally fine. And then you can have another entry on this gap. Let me read some of your questions. You can definitely use this on other pairs. Yes. Best you trade, consistent goal. So this with this, I sometimes trade JPP, JPY. I do trade US30. US30 is very, very good for this. And that's all what I tried. I have friends that use it on NASDAQ. NASDAQ is also good. So on each setup to use a certain SL. Now, for these certain setups that I'm explaining today's session, H4, H1 continuation and anticipation trades, you're gonna have 30 pips fixed. Okay. Okay, a lot of H4 levels, which is high probable. Now, as I said, in order for you to define the high probability levels on H4, you have to refine them down to H1. But before you look for entries, you have to look for the current storyline. Now, this is just the anticipation zone. So if you have a lot of H4 levels in your direction, just go to H1, and the unfresh ones, just remove them. And the ones that has a CC, just define it with another color. So you just know that is a CC and it's a high risk, okay? And for the normal ones, just keep it, okay? So how do we enter from continuation trades? Anticipation trades are not the only setups that you have, okay? You're not gonna be waiting a whole fucking week for storyline to change again and then anticipate it from a QM, a gap, or the last resort level again. So here you can take entries. How do you take entries in there? It's very, very simple. Now, after a breakout, pullback, entry, price goes up, doesn't reach the target, okay? It must not reach the target yet. So for you to take the continuation entries, on this up move right here, price creates or already created H4 levels, 1, 2, 3, okay? You might have a QM right here, okay? So the thing about this, you're only gonna look for the last leg of price. You're not gonna look for the inside leg of price right here. The levels that come from there that are gaps, okay? Just the gaps. You're not gonna use the gaps for continuation. For continuation, you're not gonna use the gaps from the last leg of price, but the gaps from the recent leg of price are good to use. Now, what are the levels that you can use from the last leg of price is the QM, just the QM from here. You can only get the QM, you can't get a gap. Now, price tends to pull back, go up, sometimes goes to this one, go up. Sometimes you take a loss in here and then goes up from there. Now, this was unfresh, which is totally fine. Now, let's take a look at some setups. You have to refine the H4 to H1. If the H1 is looking good, then you can take your trade off of that. Now, price here, after our low risk entry, it went up. Now, after going up, it created a new level. Now, that new level is right here. Just one thing, the last resort level, if it's not fresh on H1, you still can take the trade because it is the last resort. You don't have any other levels below it. So pull back here. There are no levels below, okay, in this storyline shift for price to react from. If it ever goes down and breaks below this, that means the storyline failed and we're gonna go all the way down. So even if the H1 here was not fresh, you can still take it, but just know that you're gonna put lower risk on it. Now price goes down, it's gonna take this, goes up, okay? We create a new level right here as your continuation. Now, as you can see, you have a lot of continuation entries. Price goes up, it creates an RBS right here. I do not enter off of that. Price goes up. Okay, so you're not gonna be looking at these, okay? The ones that are inside, as I explained, up, down, up, down, up. So here, you're not gonna look. You're not gonna look here, okay? You're just gonna look at the last recent leg of price. Price goes up, and then it creates a level in here. Now, why did this one break? Let's check with H1. Now, on the H1, it was also fresh, so this simply was just a loss, okay? It was just a loss, it's fine. Price goes down to your level, goes up. Now it creates another level right here, another level right here. Okay, refine that to the H1. You can see that this one is fresh, and you can take your entry from there all the way up till the next daily. Now, as you can see, 1, 2, 3, 4, 5 entries already. Creates a new level, goes up, creates a new level, missed it right here, new level, goes up. Okay, some levels fail, some levels hold. And all of these levels, they never went back to break even. So what's your break even? Apologize. What's your break even? How do you put your break even? After pullback, you're gonna also use the momentum for defining or basically putting your break even on the trade. So after entry, if M15 goes away fast from your entry, your break even is going to be after 50 pips. But if it's still choppy and after going up 30 pips, just put your break even. So if the M15 momentum is slow, 30 pips is your break even. If the M15 momentum is fast, then your break even is at 50 pips. Any questions, guys? So the stop loss for continuation is also 30 pips. No, I stopped using the M5 confirmation for these certain entries because I found that it's better to have sharper entries and sacrificing a little bit win rate, so basically like 5% win rate, or having sharper entries and less drawdown. It's good for your mental, guys. Okay, especially for those who trade prop firms, it's good to have sharp entries rather than waiting. Because before I used to use an M5 confirmation here, but my entry was here. Okay, my entry before was up there, so it would be quite, it's not really a good entry. Sometimes my stop loss is 40, sometimes it's 45, but with this, you're gonna have good looking entries, you're gonna have very good win rate. So is everything making sense for you guys? I hope everything is clicking now. So how you can take your entries, how you can, basically I'm just showing you a hint site here, but in future trading days, I hopefully can show you examples on the chart. Yeah, so from now on my stories, if you ever see an entry and you're confused about it, okay, I'm not talking about your USD yet, okay? If you see an entry on gold and you don't know the answer for how did I get an entry there, you can ask me in the group. There is no problem. Okay, so at end of every day, do we look for daily levels again, or we continue looking H4 when story is set from day before? So you're just gonna check at the recent daily if we rejected a new level or if we have a new possibility of shifting storyline. Besides that, you don't really need to look at the daily again. Okay, just follow the last storyline. If it changes, then just switch to sells. How to use this in small time frame? A lot of us know in small time frames, like 1 hour. So on the smaller time frames, you're going to use the essential correlation multi-time frame, ECMTF. The ECMTF has a lower win rate than this. Okay, so guys, this is my advice to you. I'm going to teach you ECMTF, but my advice for you, please guys, master this before you go to the fancy stuff. Okay, it might bring a lot of, I don't know, like attention in your eyes, the ECMTF one, but this one made me a lot more money than ECMTF. Okay, this one made me a very, very profitable. It made me a very profitable trader. Okay, it has a high win rate, stable, fixed stop loss, and it's very, very, very good for prop firms. I never use ECMTF for prop firms. I only use it to scale up my accounts that are personal, small personal accounts, because I'm gonna have a lot of entries per day. But the ones who wants to swing, who wants few trades per week, which is the good way to go to become a successful trader, consistent, this is the way. Okay, anticipation trades, continuation trades, keep it this simple. Okay, keep it this simple. And on the lower time frames, we're gonna go to that in few minutes. So the risk management plan, if you guys, I suggest you forward test this for a week or two. It depends on your win rate. If you find that your win rate is above 50%, then go for 2% risk per trade, okay, on your prop firms. And if it's below 50%, then start off with 1% per trade, okay? That's how I approach prop firms. Also on prop firms, I do not aim for 300 pips, 400 pips, unless I have a swing account. Guys, this is very, very simple, okay? Nothing is hard about this. The simpler, the better, always. Focus on the high win rate one. So yeah, if you guys have any questions before we proceed and go to the essential correlation multi-time frame, then please go ahead in the chat. Okay, so on prop firms, your target for anticipation trades is 120 pips for your QM and last level. This is 120, this is 120. For these guys, it depends on the momentum from 60 to 100, okay? This is my risk management plan for prop firms on anticipation trades. For continuation trades, it is also on the momentum. If the momentum is good, ITP at 100. If the momentum is bad, ITP at 60. Same as the gaps on anticipation, just for prop firms. But besides that, when you get good at it, you can know from your experience trading this strategy, you can know if you're going to hold that level to the next daily or the next zone and hold it for 200, 300 pips. Funded next, I don't know, man. Like prop firms nowadays, I can't tell you which one is good, but I can tell you the ones that I'm using currently. Today, TFT shut down. I lost 400K account with them. I had few dollars there. I was waiting for my payout, but then suddenly just shut off. So I can't tell you which prop firms to buy, but currently the ones that I trust are Fund and Pips, FTMO, and Alpha Capital Group. Okay, so these are the only prop firms that I still have accounts with them currently, and the only ones that I trust. I have accounts with other firms, but I don't really trust them because they can shut down tomorrow. I don't know. So for brokers, I told you IC markets, fusion markets, or XM for high leverage. Okay. Yes, for momentum, always check on M15 chart or M5 for your entries. It depends on the one you like. Both are the same. Sometimes I use M15, sometimes I use M5. Okay. What do you mean 5%? So here I'm going to show you how to take a high risk entry. This high risk entry has a 50% 50% win rate. So let me just read this question. IC markets, fusion markets, and XM. XM basically is a broker that provides high leverage, but sometimes they don't pay you out on the same day. You have to wait 2 weeks or 1 week. They have some issues because any broker, guys, in the world that has high leverage is pretty risky. But this one been doing good for me for the last year. Yeah, this one provides 2,000 leverage, but IC markets, fusion markets is good for the guys that wants to deposit more than 2,000, like $3,000, and just make consistent profits on it. And you're gonna find really good results 6-8 months, year or so. Okay. What are we gonna have here? Daily to daily. Daily breakout. Sorry, H4 breakout. H4 pulls back and then goes up. Continuation pulls back, goes up. Continuation pulls back, goes up. Now the next closest daily right here can be actually a setup. Okay, you're gonna have 3 dailies. How can this be your setup? You're gonna refine this daily down to H4 and H1. So daily, H4 down to H1. You're gonna find the freshest H1 level. Freshest, okay? If you have H4, H1 also fresh, you can take a setup against the storyline, okay? You can take a setup against the storyline and TP also at 60 or 100 pips, depends on the momentum on M15 or M5. Now, if H1 is unfresh and daily H4 is fresh, then avoid this high risk entry. As I said, this entry has a 50% win rate, okay? This daily, you're gonna do the same with it, okay? You're just gonna ignore it if the H4, H1 is also unfresh, okay? Any other questions, guys? Actually, let me just give you an example right here. Now, as you can see, price was bearish from here. Daily reject daily, and an H4 breakout the next day. Price was going down. I'm not really sure if we had an H4 breakout here, but let's just pretend that the storyline is bearish from here. Storyline is bearish. Where is the next closest fresh daily? Now this one was unfresh after the daily candle here. So the next fresh one is right here. You're going to be refining this down to H4. So on H4, you're going to take this one, okay? This one is not a CC candle. Look at this. Rejection and closed against the direction of the level. Okay, we want to buy from the level, so this one should close bullish, but this one closed bearish, so you're not going to take this one. That does not mean you're going to completely ignore the daily, but simply look if there are levels below that. So on H4, you're going to have this one, and if that one is also fresh on H1, as you can see here, then you can feel free to put a small risk in here as a high risk entry. Okay. Can we look for an H4 breakout if the weekly level is rejected, or should we only go one time frame low? Now, for today's session, what we learned today, I want to keep it simple. So just go one time frame lower until our next session. Should look for any other setup when H4 external breakout happened or third day of. No, if the H4 external breakout happened on the third day, then the storyline did not shift and it's still going to go. It's still going to follow the old one. You also check MT4 chart for entries or just a one-down pepperstone. So a one-down pepperstone alone and MT4, I'm just going to put the limit. Depends on the price that I've seen on TradingView. So if I have a level here, I'm just going to put that price on my MT4. Okay. I think it's best to keep the ECMTF for the next session because it's going to be a lot of mess if I give it today to you guys. So I'm just going to keep it for the next session. I'm going to put like a 15-minute for it before we jump in our EURUSD one. Guys, the session is going to end. Let me just send you a new link. Okay, I'm going to explain what we're going to do in the next session.